Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on? Well, it's Fed Day, right? Federal Reserve, they're going to come out. Today is the official pivot. We're going to pivot today, right? What does that mean? It means we're going to cut rates. We're going to start dropping rates. Now, it doesn't make a lot of sense to me. We still have prices going up, stock market at a record high, housing market close to record high. Inflation is not conquered, but yet we're going to cut rates, right? Okay, now this is going to be interesting today. They're definitely going to cut, right? Question is, are they going to cut a quarter point or a half a point? Now, a lot of people think they're going to cut the half point, and they may be right. I'm really not sure on this one. Let's say they cut a quarter point. Here's my thinking. Market's going to be a little disappointed with the quarter point. So the market may come down first before they push it up higher. I do think they will push the market up higher. Market usually tops out a week or two after the pivot. You get that rally with the pivot. Now let's say they cut a half a point cut, right? Now that's going to make the market very happy. It's going to take off, right? It's going to head up. But then people are going to stop and think, why are they cutting a half a point? Are things really that bad? So even though we're headed up, we might come in first before they push the market up higher. They're going to push the market up higher into the next week or two, and then it's time to take the shot on the downside. This is just my take. This is just what I'll be doing. You do you, I'll do me. Okay, so I had dinner with my accountant last night, and it was fascinating. Now, he thinks that we're definitely doomed as a country from a financial standpoint, right? From all the debt print. He thinks that it is over, the game's over, but it could take a long time to play out. He still thinks we have 5 years left. Now, I don't think we have that long left. That's just my take. I think for sure we maybe a year. Could happen next week, though. You got to be prepared for it, right? Now, with the Fed rate cut, what's going to happen? I think commodities are going to take off. They're going to take off. It's going to be very inflationary, right? The Fed's cutting rates. Inflation is going to take off. What's going to cause inflation? Commodity prices going higher. What are commodities? Things like corn, wheat, oil, right? Okay, now gold and silver, also commodities, even though I look at those as just real money. They're money, right? I don't really look at them as commodities. Everything moves compared to gold and silver. A lot of people think that prices are going up. Now the stock market's going up. Houses are going up. No, they're really not. Your purchasing power is going down. Compared to gold, the stock market has having a down year. Compared to gold, houses are getting crushed. Compared to real money, prices are actually coming down, right? Gold is telling you that the debt does matter. A lot of people think the debt doesn't matter. The debt does matter, and what's telling you that is gold going parabolic. Now, we are overdue for a pullback in gold. I really hope it comes down. I'd like to get some more, right? And I don't want to pay these high prices. I mean, what is gold? I don't know, 25.70, let's call it. You can't touch an ounce of gold now for below 2,700. Most dealers are selling it up around 2,800. That's a lot of money for 1 ounce of gold. I'm hoping for a pullback. We'll see if we get that. Maybe we do when the market comes in, and the market will come in. But you got to wait another week or two because we're just starting the Fed pivot today. Very exciting day. Okay, so my accountant thinks that, we got a little bit of time left to keep stacking the gold and silver. And maybe we do. Maybe you have a little time to get out of the fiat system and get into the real money system. But it was interesting. I was talking to him about the real estate market. He can't figure it out. He has a lot of clients. Now, I live right around Apple Computer, a very rich area, Silicon Valley. We're here at the center of it. And he's having clients that are not able to sell their houses. Now, granted, these are expensive houses, $2, $3, $4, $5 million houses, but these were jumping just 6 months ago. Now they're not. Things have shifted, and you're going to get the news come out December. They're a little bit behind reporting the bad news in the real estate market. Don't want to report this news before the election. That's for sure. You don't want to let people know that the housing market has shifted and the crash has started. You don't want to let people know that. But let's talk about this. I talk a lot about how I think home prices could drop by 40%, right? And that's in nominal terms. In real terms, they're going to drop by much more. They're already getting crushed in real terms, but in nominal terms, I still think they can come down by 40%. Now, once again, where I live is around Apple Computer. Now, if you go back to 2012, that was where, the crash started in 2008 and the houses bottomed in 2012. And anyways, what they do to make the house go back up? They printed a lot of money, right? Okay, so in 2012, you could buy a house right around the area where I live for about $700,000. If you found a good deal, you could get it for $600,000. Okay, and I sold a lot of them. I found some homes that were around $600,000. Now, those homes that were around $600,000 in 2012, right? Well, they're going close to 3 million. I'm going to use rough numbers. So they went from 600,000 to 3 million. They went up 5x, 5 times, right? 600,000, now $3 million. Now, to me, that sounds a little bit extreme. It sounds like there's no price discovering houses, because I'll be the first one to tell you that the houses are not really worth $3 million for the 1,200 square foot tract home that's 70 years old, with a small lot. Maybe you get 5,000 square foot lot with that, right? And you got to pay $3 million. If the closer you are to Apple, the more it goes up, right? Everybody wants to walk to work, let's say. Those are going $4 million. Okay, but my point is they went from 600,000 to 3 million. Okay, and they did it from, basically from 2012 till now, what are we, 24? Okay, so in the last 12 years. Now, could prices actually go back to 2012 level? But Mike, that's impossible. It's impossible for prices to go back to 2012 level. That could never happen in a million years. Well, it might happen faster than 12 years. We really don't know. But yes, it is physically possible for that to happen. Prices could go back to just 2012 level. Now, I actually think they could go even farther back, because why? Because we never let the market fully flush out. What did the Fed do? They started printing money. We've never had the crash. The crash started in 2008. The Fed stopped it by printing money. So eventually you're going to get the full flush out of the crash. This is just my take. So yes, you could go back to 2012 levels, and you could even go beyond that. But in my area, if you went back to 2012 levels, what percent in nominal terms would the drop be? Well, it'd be 80%. 80%. You go from 3 million back to 600,000, 2012 levels, you'd be down 80%. Now, the whole nation, they're not going to drop 80%. They could, every area could, but a lot of areas didn't go up that much. You go to Beatrice, Nebraska, right? I mean, they were to, 80,000, went up to 86,000. Maybe they come back down to 80,000. It's different areas. I understand that. Real estate is very, location is very important in real estate pricing, right? But I do think we could return to 2012 levels and even overshoot those levels to the downside to finally get the flush out of the system. You see, the market wants to flush out the system. Now, I keep saying I live next to Apple Computer. I want to talk a little bit about that. Okay, so Apple Computer, well, I think it was one of the first trillion-dollar companies, may have been the first trillion-dollar company. I'm not really sure. You see, I actually thought back in 2000 that Cisco Systems would become the first trillion-dollar company. They were worth $500 billion, and if their stock just doubled one more time, their stock kept doubling. If it just doubled one more time, they would have reached the first trillion-dollar company. Well, they never got to $1 trillion. Still not worth $1 trillion today. So I think Apple Computer was one of the first, if not the first, to reach the level of $1 trillion. Now, how long did it take them to get to $1 trillion? I don't have the exact number. That's called 40 years. 40 years. Okay. Took them 40 years to get to $1 trillion. Now, how long to get to 2 trillion after that? 2 or 3 years. And how long to get to 3 trillion after 2 or 3 years. How'd they do that so quickly? How's that possible? Well, what happened is we printed money, right? We printed money, and every money's got to go somewhere, so it flew into the stock market. And Apple, being the hot stock with their iPhone, it became worth, well, not a trillion, not 2 trillion, became worth over $3 trillion. And I think we got a couple others that are now over $3 trillion. But these companies, they went really quick from 1 trillion to 3 trillion. Now, did they really make that much more in value? Not really. They just printed so much money that has to go somewhere. Now, the home that went from $600,000 to $3 million, okay, that went very quick too, right? I mean, it took, well, shoot, those homes for $600,000, they were selling for $15,000, and it took, 60 years to get them to, the $600,000 level, but they go from the $600,000 level to $3 million in 12 years, right? Because they printed so much money. Now, what's going to happen? Well, here's the thing. Printing money used to be efficient, and I was in favor of it when they started. Well, that's a pretty good idea. You could print $1 and you could get $3 in the GDP and, production. So for every dollar you printed, you put it into the economy would kick $3 back out. Well, do you realize that this is reversed now? Every $3 that they print, you only get $1 added to the economy, $1 added to the GDP. Now, eventually they're going to print $20 to get that $1. Then they're going to print $50 to get that $1. And this is where you're going to have a kind of hyperinflation. Now, we're going into a depression. I'm 100% convinced of that. Now, a lot of people don't know if there's going to be a deflationary depression or an inflationary depression. You see, you can still have a depression with inflation. What is a depression? A depression just means that your quality of life is going to go down. Your quality of life is going to decrease. And that can happen from inflation as well as deflation. They both can lead to a depression. My guess is that prices will start to drop, and then the Fed go, we can't have this. And they're going to print a lot of money. They're going to just print and print and print. And that will take us to that inflationary depression. But the reason your quality of life is going to drop so quickly is because you're not going to be able to afford anything. You're not going to be able to afford that $30 loaf of bread. You're not going to be able to afford food for your family. You're not going to be able to afford to heat your house. So you're going to be very cold in the wintertime and very hot in the summertime because you cannot afford. Your quality of life is going to drop due to the inflationary pressures that are going to happen. And a lot of people are not going to survive this. When the debt bubble finally pops, a lot of people will not survive. They just won't be able to afford food. They won't be able to live. They will die. It's just the way it's going to play out. It's sad, but that's how things work. We have this debt bubble, and this debt bubble is going to pop. It's going to pop, and if you prepare yourself for this, you will be one that survives. Now, I say financially, the way to prepare yourself is with real money. You get into gold, get into silver, the coin of the realm if you can. That's the coin of your country. You buy the dimes, the quarters, half dollars, dollars. You buy the silver eagles and the gold market. You buy either the American eagle or the buffalo. You live up in Canada. You get those maple leaves, but you buy the coin of your country because it's the most recognizable when you got to do barter, when you got to do trading with it, when everything comes tumbling down. Everything's going to come tumbling down. You see, something big is going to break. Something big is going to give. We don't know exactly how this is going to play out. We don't know where the black swan's going to come from, but we do know that it'll play out because it's not sustainable. And here's why. Okay, so they were printing $1 trillion every 100 days, $1 trillion every 100 days. Now we're printing $1 trillion every 80 days. Soon we'll be printing $1 trillion every 50, and then 30, then 20, and then we'll print $1 trillion a day. Now, do you think it's sustainable to print $1 trillion a day? I'm telling you, it's not. It's not sustainable. We got 36 trillion in debt right now, and that just the interest on that is over $1 trillion a year, soon to be over $2 trillion a year, which will be half of the money we bring in taxes. We will have to pay the interest on the debt. Now, eventually something gives, something big will break, something is going to not work out for a lot of people. Maybe we default on all the debt. Maybe we just say, hey, we can't pay, and now your bonds are worthless and the whole thing comes crumbling down. Or we keep printing, we get to where it's $1 trillion a day, and then something breaks there, because that is totally not sustainable. I mean, it will break long before that point, and they will have to reset it to a new economy. We don't know what that's going to look like. It's going to be scary. Scares me, right? And that's why I prepare. That's why I get the gold and silver. That's why I've been stacking gold and silver for a long time, and that's just what I do. And a lot of people, tell me, but Mike, gold's going to crash. It's going to go down. It's a worthless relic. Well, that's fine. You can do you. I'll do me. I'll keep stacking. I started when it was 300. It's now 2,500. You got to get one. You got to pay about 27.50 right now. So it went from 300 to 27.50, and I'm sure I'm going to keep stacking and keep going up and up and up. Now, it's not going to do it in a straight line. I am hoping, I'm praying for a pullback, right? Things are getting expensive. It's pricing people out of the gold market. And if you're priced out of the gold market, nothing wrong with silver. Silver is going to have a better run anyways. And you can still get one $35 for an eagle. Still a bargain. That's the best asset you can buy right now to protect yourself. Anyways, if you like this stuff, I'm Tall Mike. Give me the thumbs up, punch the subscribe button. Get out there, everybody. Have a great day. We'll talk again real soon. Bye-bye now.